Well, greetings and salutations, test takers. This is the Series 7 Guru, with another ride along, a free ride. We're going to be doing a practice exam, the benchmark exam from our friends at Knopman Marks. They have some great content. Thank you for Brian Marks and the team over there and allowing us to give you a free look at Knopman content. If you'd like to buy Knopman content, the discount code is Guru10, and that gives you a 10% discount on Knopman Marks content. All right, well, here we go with the benchmark exam. Let's see how we do. Question number one. LBK Retailers, Inc. will declare a cash dividend to its shareholders next week. Which of these events will occur?
Okay, so when you're declaring a cash dividend, I feel like it's the current assets decline, but I don't remember if you declare it or if you pay it that declines. I'm trying to remember.
Yeah, this is all in the future tense. So it says LBK Retailers will declare a cash dividend to its shareholders next week. Which of the following events will occur? So that's the declared date, right? They're saying what happens on the declared date.
Um, I feel like it's between A and C. Am I like fully off on this one?
Well, I don't know. I remember we're trying to get the benchmark, and so I'm going to be kind of a jerk, and I'm not going to tell you what I think until you give me an answer, and then I will tell you what my thoughts
All
are.
right, I'm gonna go A.
You missed it because remember current liability. So declared dividend becomes a current liability. So it's
So
B
then
as
the
in
current
boy,
liabilities increase.
right? And working capital would decrease. You don't have a choice that says working capital decrease. The biggest takeaway is declared dividends once declared. So when they declare this dividend, it'll become a current liability, and therefore the current liabilities will increase and the working capital will decrease.
Okay.
A client owns various amounts of stock across several different industries, but is concerned that a broad market pullback will erode her portfolio. A registered rep might suggest which of the following trading strategies to this client.
Um, so she owns various amounts of stocks across several different industries, but is concerned that a broad market will erode. Registered rep. I'm just trying to like understand the question.
I'm with you. I'm with you. So, right. So, client owns various amounts of stock across several different industries, is in concern about a broad market pullback. So that's the pivot. So, what kind of risk is that when the entire market goes down?
That's going to be systematic risk.
That's right. So, you're trying to do something to hedge systematic risk.
So vertical spreads up. So I don't think it's A.
It's not A.
I don't even think it's going to be D. I think I'm
It's
between
not D.
short straddles and index
You're
puts.
correct. That's the 50-50.
Okay. Um, so she so she is concerned about like I want to go with the short straddles, like that's kind of where I'm leaning towards. But also index puts would help with the pullback
You're
that
correct.
might
So
be
which one do you want?
eroding her portfolio.
So which one are you picking?
I like need to just read this one more time.
Okay.
And client owns various amount of stock across several different industries.
If it was, let's just change the question. What if it said a client owns various amounts of stock, but is concerned that a particular stock will pull back?
I
What would
guess
you do?
index puts.
Yeah, right. Because if you're worried about selection risk, you'd buy a put on the particular stock you're worried about. But if you're
Yeah.
worried about systematic risk, I say, hey, it's okay. We're hedged. The market's going down, but our puts are going up.
Yeah.
Right. Right on. I would also know that index options settle in cash.
Yes, I know that.
Which of the following best describes the bond equivalent yield?
Bond equivalent is the dollar value of all expected cash flows. It is the annual percentage yield of a bond, which does not make, is a coupon rate of interest multiplied by the number. Um, the bond equivalent yield, like, is that asking
Yeah,
me?
I have no idea. We'll see I'm just reading what they're offering us as answers here.
These are
It's the
like,
dollar value of all expected cash flow. I'm not sure that would be called discounted cash flow. I don't think it's
no,
a
I don't
the
think, I
annual
think it would be
percentage yield for a bond, which does not make annual payments.
that. I don't think it's that either.
It's a coupon rate. If it is the coupon rate of interest multiplied by the number of payments generated from a bond. I don't like what I'm looking for. Yield usually means some kind of division, something like that. It is the yield on a bond if all coupon payments were reinvested and the bond were held to maturity.
I want to go with C, but
D is a dog or C is in Charlie?
C is in Charlie, but I,
I'm going to go with D. Let's see what happens on that one. I'm not sure, you may be correct. I'm going to go with D just because it makes the most sense to me based on the question, but you won't see anything on bond equivalent yield on the actual exam. What you will see is taxable equivalent yield and
okay.
tax-free
That's what I
equivalent.
was getting confused on because the language in that question just threw me off.
Right on, right on. Which of the following statements would constitute a valid reason for investing in Eurobonds?
Mm, okay, Eurobonds can provide diversification. Eurobonds are denominated in the US dollar.
Well, be careful. I said I'm not going to
Or
help you, but
no, they're not. They're in the foreign currency.
that's right. So
And
if
then
it
it's
was
euro dollar.
denominated in dollars, it would say euro
Euro,
dollar.
yeah, euro dollar. Okay.
So
So
the
they can
word dollar is missing. So this is denominated in euros.
Yep. So, okay, euro bonds can be purchased more inexpensively. Euro bonds are traded in an unregulated market. They can provide an exchange rate hedge. Um, when they're talking about the exchange rate reg, are they just talking about like kind of like the spot rate?
Yeah, they're talking about. So if you're getting euros, would that be in a hedge against the fall in the dollar? If the dollar is going down, that means the euro is going.
Up. So that would be a hedge.
Yeah, yeah, I think that's the right answer. It's either A or D. I think
I
D.
was about to tell you because euro bonds also do provide diversification.
That's right. Yeah, I think it's either A or D. I just think D is tighter. And
Yeah.
remember, we can mark you wrong given that there's two right answers if you don't come up with the best answer. So let's flag. I like this. They have a flag
Flag.
question. So we'll flag the ones that let's go back and flag that last one. Let's flag that one.
Yeah, that one was.
All right. Whoop. I'm going
Oh,
to
wait.
answer it.
Yep, there you go.
A client recently purchased 200 shares of ABC at 18 and has since seen the shares increase in value to 21.50. The client,
Okay, I'm just gonna multiply 200 by 18 first, which is 3,600. I don't know why I did that, but I just had like a, okay, so a client purchased 200 shares of ABC at 18 and has since seen the shares increase to 21.50. The client must use this capital gain to offset any losses, does not have a current liability. I mean, she doesn't have a current tax liability at this time because she hasn't sold
yep,
anything.
exactly right. Exactly right. A customer has a short account with 25,000 short market value
Dog.
and 37,000 credit balance, an SMA of 500. What is the maximum short market value before the customer will incur a maintenance call?
I just need to start doing the math on this really quickly. Short account with 25,000 and a credit balance. Okay, so um okay. So Uh, okay. What is the maximum short market value before they incur a maintenance call? And then, um, hold on one second. I'm just, margin has never been my strong suit.
No, that's okay. You're only going to get 3 or 4 margin questions on the exam.
This is nothing new. Okay. Let's see. So do I like I'm attempting to start this by doing the margin equation for a short market account?
Well, this is called market value at maintenance.
Mm-hmm.
And so if this was a long account, you would take the debit by 0.75.
Yep. Oh yeah, yeah, yeah. Okay. Don't even say anything else. I think I know what to do now. Um, 28,462.
Yeah, credit by 1.3.
Yeah. That's what I thought it was, but I didn't know if there was any other.
Yeah,
I
well,
don't
that's okay. Like I
make
said,
them more complicated than they
yeah.
are.
A broker dealer will be sponsoring a virtual town hall, and one of its registered representatives will be that will be based on a periodical that will be distributed to some of the firm's invited clients. This periodical must be,
Okay, sponsoring a virtual town hall. One will be delivering comments that will be based on a periodical that will be distributed to one of the firm's invited clients. Is it only going to some of the firms? And well, that doesn't give me like an exact number. So I'm gonna
yeah, it doesn't. Yeah, so I'm with you. A broker dealer response virtual town hall. Virtual means it's going to be online. One of its registered reps will be delivering comments that will be based on the periodical that will be distributed to some of the firm's invited clients. So what I like to do is I like to make up the scenario even a little more particular. I'm going to say it's The Economist, and The Economist has a essay they wrote on America's economy being the best in the world, and I'm not going to be commenting on that as a registered representative.
Mhm. Um, I feel like it could be like it doesn't tell us how many, which makes me believe it
Yeah,
could
I'm
be
with you. I'm with you.
communication. So it would need like prior approval.
Yeah, I think this one will flag. So which one are you going with?
Um, Approved by and filed. Yeah, advertising committee of FINRA at least 10 days prior to the town hall. Approved a principal of the firm in advance if it's distributed to more than 25. Approved by principal of the firm in advance since it's being distributed to retail clients of the firm. Like I don't like like A because 25 and
Yeah, I'm
below
with you. I'm with you. I think B is
correspondence.
our, I'm with you. We'll see. I think B is the tighter, best answer.
Yeah, I was looking at B. B was like, because I also don't like the other two. Like, I
Yeah, I'm
think
with you.
B would be the other potential answer.
Yeah. They provide us, I think this is an interesting question. We'll see. They didn't provide us the more than 25 in the question, but they did provide it to us in the answer set. So
Mhm.
according to MSRB rules, all the following are required customer account information except the,
All of the following are required customer account information. So I know that it's definitely the name and the birthday.
yeah,
I also think it's the social security.
you're correct. Yeah.
Hold on. Customer account information. Signature of the municipal securities. Introducing the account. Is it D?
Yeah, remember, there's no customer, you don't have to sign the new account form, the principal does.
Right.
ABC currently has earnings of 4 and pays a quarterly dividend of 50 cents. The
Okay.
market price is 40. What is the current yield?
Just give me one sec. Um, is it 5%?
Yeah, that's right, right? The AMP, annual interest or dividend, in this case, annual dividend, which is going to be $2.
Mm-hmm.
AMP, market price, right? So what it pays us for $2 by what it costs us, $40, that's 5%. By the way, I probably might have missed this because I thought you were going to ask us the dividend payout ratio, which is 50%, right? $2 of the 4 is what they're distributing.
Oh, hold on. Go back.
They just asked us current yield. So the $4 there is just to mess this up. But what I was saying is, if I was a test taker and I saw the 4 and I saw the 50 cents, I could have said, "Oh, I bet they're paying asking me dividend payout ratio." PS, what is the price to earnings ratio on this stock? What is
Right.
the price to earnings ratio on this stock?
Wouldn't that be 20%?
No, it would be price 40 divided by earnings
Oh,
4, it would be 10.
never mind. Yeah, 10. Sorry.
No worries.
My brain's a little fried today.
Your client, Susan, indicates she's looking for an income-oriented investment. Which of the following would not be appropriate alternatives for Susan?
The income bond.
Yeah, that comes up in every test prep vendor has an income adjustment bond question, which is a hint. Make sure you get it. U.S. manufacturing company is exporting goods. So it's a U.S. exporter, and
US.
they're exporting goods to Canada. The company will receive Canadian dollars, known as loonies. How would the U.S. company hedge?
So for the US export, we're still dealing with Epic, right? We're not dealing
That's
with
right.
Epic
That's exactly right.
because the IPEC is when the foreign is the
That's right. If it was about the Canadian company, it would be the reverse, but it's about the U.S. exporter.
right. So we're gonna so the customer is exporting goods. So exporters buy puts. So Canadian puts.
Right on. A client holding an individual account has requested that their spouse be added to the account, thereby enabling the spouse to place trades for the account. The register rep handling this account.
Okay, he has requested that the spouse be added to the account. So I'm assuming that the spouse wants like limited power of attorney.
Yeah, that's what it sounds like to me as well, right?
So I'm gonna go D.
Yeah, I think so. Yeah. Your client Jim has received a dividend from his real estate investment trust, his REIT. He asks you how this dividend will be, if this dividend will be treated the same way as the dividend he receives from his XYZ common stock, which he's owned for several years. You should tell Jim that.
Okay. Your client Jim has received a dividend from his real estate investment trust. He asks you if this dividend is treated just after holding the REIT. Uh a taxable rate that applies to his common stock. A dividend from REITs are taxed at a favorable rate. Isn't there some kind of holding period for a REIT for a year?
Well, no, it's actually
Or not?
the pivot is that his common stock he's owned for several years.
Okay, so yeah, so
So I
equity
think the
are
dividends,
taxed
Jim,
at the preferred rate. After holding the REIT for 1 year, the dividends are taxed. The tax rate applies to the common stock investment, does not apply to his REIT. Um, Dividend from REITs are taxed at a favorable rate if it's been open for 61 days. That's kind of a weird number
yep,
that I personally haven't seen yet.
yep. So then don't pick
So
it. If you haven't seen it,
I don't think it's A and I don't think it's C.
right?
I'm kind of leaning towards D, but I
You're
also
looking
think it
for, what are
could
you
be
looking for? What are you leaning towards?
between B and D. I'm just trying to like reread them. The tax rate that applies to XYZ. Maybe B. Final answer. If I
I
get a
think, yeah, I'm with you. I think that's going to be the answer because here's what I'm thinking. I'm thinking, and we could be overthinking it, but I think what this is getting at is right. He's going to get qualified dividends from his common stock because if you've owned the common stock 60 to 90 days, been on the stock before the record date, it's a qualified dividend taxed at a lower rate than your ordinary income tax rates. That's not true of a REIT. So I think B is the correct answer. A registered rep is doing an annual check-in with a client who indicates they'd like to move away from riskier investments and concentrate on safer markets. In light of this information, you're least likely to recommend.
So they'd like to move away from riskier investments. Okay. Um, and move into safer, more liquid. So that's really pushing me towards the government short-term bond fund, but also,
Least likely.
oh, they're least likely. Okay, so then um an exchange traded fund, an exchange traded note, a diversified investment company. Diversified investment company. Um, I'm gonna maybe go diversified investment company, but I'm kind of also towards the exchange traded. Um, is the exchange, yeah, the ETF, the exchange traded. I'm kind of torn. The exchange traded note. Is that kind of like an equity linked note?
Yeah, it's exactly for test purposes, the same thing.
Because that's like a structured product. So
That's
that's
right. Okay, now you're on the right track. Woo!
okay. See,
Excellent. Love how you got there. That's
that was
like
crazy
it,
that I
right?
went that spiral.
But yeah, but remember the exchange trade note, you have counterparty risk. It doesn't have the liquidity the others have. So
I just went through an emotional spiral on that question.
Ben purchased a triple X index option on Wednesday, May 4th, and submitted an exercise notice on Friday, May 20th. The
Hmm.
exercise settlement date for this transaction is,
Well, index options are T plus one, right?
that's right.
So wouldn't it be the, okay, hold on. So he purchased it on the 4th and the extra, I'm still thinking it's the same day.
So you think it's Friday?
Um, the exercise, okay, no, Friday, Saturday, Sunday, Monday.
Yeah, T plus one.
Yeah, Monday. Sorry.
No worries.
I don't know why, but then I was like index settle in cash,
Oh,
cash
yeah,
T
they
plus
settle in
one.
cash, but they T plus one. A 35-year-old investor is considering the purchase of a Z tranche, but does not want to incur a tax liability for interest payments that will not be received until maturity. To help achieve this goal, the registrant might be recommend that this security be carried in.
So he's considering a purchase of a Z tranche, does not want to incur. Wouldn't that just be like a traditional brokerage account? I'm kind of between that because like a Z tranche, I don't think a Z tranche is collateralized
Yeah, it's a CMO. It's a CMO for sure.
CMO, and CMOs are a little risky. So I know that they wouldn't be in a money market. I know they're not going to be in an UGMA account, and I
There you
don't
go. So
think
it's
that
either
they're
B or
allowed
D.
in an individual retirement account either.
Yeah, I don't know what's flagging. I'm going to say I don't like B, but the reason I would have gone with B is it says tax liability.
You'd put a Z
Yeah, I
tranche
don't
in a
know. It could be, but
retirement.
I'm with you. I don't think we should put a Z tranche in an IRA, but then it says you don't want to incur a tax liability. Traditional brokerage account will not be received for interest payments. I get the idea that what he doesn't want is pay fathom income, but we'll see. We'll see what it says.
I
The
hate
current yield of a municipal bond is,
the current yield is the annual. It's A.
yeah, you missed that one. You had to flunk the entire test immediately.
Oh, don't say that.
Which of the following activities would have a dilutive effect on an investor's position? I like this one.
Wouldn't that be the conversion
Right
of
on. Yeah, yeah. You know, in A and B, everybody gets more stock, so we all are still in the same place. Convert, the share count goes up. A day order is entered to buy 500 shares of XYZ at 24 and 3/8. By the close, the firm has 100 shares at 24.25 and 200 shares at 24.37. The remainder is on filled. What is the outcome?
um I think that it could be D. The client can accept the
Yeah.
execution for 300 and the remainder is
Yeah,
canceled.
unless he told us all or none or fill or kill or whatever, then yeah, D.
Okay. I have genuinely no idea what a Monte Carlo simulation is, so I'm just gonna throw my best guess out here for this. Okay. Which of the following best states the objective? Fund investor, how
A
much?
Monte Carlo simulation.
To provide the investor with a range of possible outcomes, to estimate the probability that certain, to be able to reasonably predict the outcome of an investment decision, assuming there is a minimum degree of, um, To provide the investors with a range of possible outcomes and probabilities. I'm between C and D. I just
I'm with
don't,
you. I'm with you. I think it's C or
I
D,
don't
so we got to
really,
decide which
I
C
don't
is
really
better.
know what this is, so I'm fully
Well,
guessing.
what we do is we do this to say, hey, I've run a Monte Carlo simulation and it says we have this probability. So we have to say either we're going to say the
But it's
probabilities that will occur,
based on the
also,
weighted.
or to estimate the probability of a certain investment outcome will occur based on the weighted average of several different variables.
I'm gonna go C, and if I get it
Yeah, I
wrong,
think that's going to be either C or D, just depending on. I think it's going to be D just because it says to estimate the probability of certain investment outcome probability, possible outcomes, and the probabilities they will occur based on weighted average. Yeah, we'll see. I don't know what, and lots of test prep vendors have that in their Series 7 content. Maybe they know something I don't know. Monte Carlo simulation is very low probability when it does show up. It's on NASA exams, 65, 66, and not on sevens, but maybe they got some debrief I don't have. A convertible preferred stock has a conversion price of 25 and is trading at 90. If the underlying stock is trading at 23,
um, okay, 23. So I still need to find the conversion ratio,
yeah, I
right?
think that's what I would do. I would take, price so we can get 4
40
shares.
and multiply it by the 23. So that's 920. So it'd be appropriate. I feel like it'd be appropriate to convert it.
Yeah, it looks like there's an arbitrage opportunity, right? Because we can
Yeah.
get this
Nine-
it has a convert, it's trading at 90 and we
Yeah.
can get 4 shares. That means we would be able to get the stock at 22.50 and it says the stock's at 23. Arbitrage opportunity.
So I think it's B.
Yeah, I think you're right.
I hope so.
Mr. Jones buys 100 shares of mutual fund on December 28, 2001 for $4,000. He receives a capital gains distribution of 240 on March 6th. He sells his 100 shares for 4,300 for tax purposes. These transactions result in,
Oh my God. I need to like write this down. He
yeah,
buys 100 shares on the 28th for
mhm,
$4,000.
that's right.
So he buys 100 shares um on December 28th for 4,000. 2001. Okay, and then he receives a capital gains distribution of 240 per share. So, okay, and then he sells his 100 shares. He sells 100 shares for 4,300. So, he bought the shares and he bought them for 4,000 and then he's selling them for 40.
Yep.
So, the transactions will result in um I'm between like B and D. Is it
Say
B?
neither A nor B. So the guy doesn't owe taxes.
Yeah, no, I'm gonna go B.
I think you missed it. I think it's going to be both A and B, right?
Oh,
Right.
okay.
He receives a capital gains distribution of 240. You owe taxes on that.
Oh yeah.
So that's 240 there. And then you sell at 43 and you owe taxes on that. So
I wasn't thinking properly, but yes.
that's okay. That's all right. The options disclosure document must be provided to customers.
Um, isn't it the with 15 days?
Well, the 15 days is from
But
account approval to get
it's
back
not
to you.
approval of the new option account. It's at or before the first trade, right?
What is the principal going to ask you? He's going to say, did you give the person the OCC disclosure document?
Yes.
And you are going to say yes. And that means,
Prior to the first. Option trade in a new account before any unsolicited orders at or prior to the approval of the new option account.
Yeah, you gotta give them the disclosure. Like your principal's gonna kick it back to you. You say you haven't given it to him yet, right? Then I call you and say you got it approved.
Mm-hmm.
When an investor establishes a debit spread, he has.
A debit spread, he's purchased and sold something, having the one lower strike. So establishes a debit spread. A debit spread. Call without having the lower strike. So call add to the lower.
That's right. They didn't ask you break even, but you're correct. It was a call spread. The break even would be the net premium added to the lower strike. That's not the question, but
No, I know, but they're asking what he has.
that's right. So this is a question. I think it's the hardest type of question. They're asking you to identify a spread missing the premiums. So you know it's either B or D because A is a straddle and C is a covered call. So it's not A, it's not C, it's either B or D.
Um, the one call written and purchased a call. The one purchased having a lower call add to the lower, and it's a debit spread. Yeah, I feel like it's D
You're
because
correct. Yeah.
oh,
Lower, higher, longer, lower, higher, longer.
oh my
Lower strike call contracts always have greater premiums.
test is putting me through an emotional spiral.
Which of the line best describes the AMT?
Okay, is assessed. No, it's not on all taxpayers. Um, it is standard in the tax code that eliminates. It is a process for, I feel like it's A.
You are correct.
Thank you,
And
Julie.
remember, the bonds that are preference items are the industrial development revenue bonds, known as private activity bonds.
Yeah.
Yeah, that's a preference item and public purpose non-essential. A cash dividend received by a retail investor would be taxed at a preferred rate if the investor,
A cash dividend received by a retail investor. Um, purchase the shares at least 30 days prior. Like, what do they mean by the preferred rate?
yeah, be taxed at a preferred rate, lower than your ordinary income tax rate.
Um, has held stock for more than 60 days surrounding the X date, sells their shares no later than 60 days. Purchase, like, I don't know. I'm kind of gravitating towards A, but
Yeah, I think it's a difficult question because they're asking you about I think we're asking us about a qualified dividend. And a
yeah,
qualified dividend, if a corporation owned more than 20%, it would be
20%.
that, but it says retail. I think
I
it's going to be the 60 days because it's 60 to 90 from the record date. But the only thing I have that's close is the X date, so I'll take that. Are you taking A? I think I would take C. I don't think it's a test issue anyways, but
I'm gonna take A. I just don't understand like the question that well.
yeah, well, what they're saying is, do you get a preferential tax rate as a retail investor on stocks that pay dividends? And the answer is yes, if it's a qualified dividend.
Oh
And
yeah.
the dividend would be qualified by how long you've held it prior to the record date. So it's either 60, 90 days, depending on common or preferred. Again, I think it's a tough one. I don't think it's something you're going to encounter on your actual exam. Whoop, let's whack it. A manufacturing corporation headquartered in Texas has operating locations in Dallas and Houston. It's planning on doing a Rule 147 offering during the next few months. These securities may be purchased by,
It's only in the state of Texas. It's not the city. It's like
that's
all
right.
residents of Texas.
Yeah, perfect. Very testable. A qualitative analysis of a general obligation bond is to be issued would take in all the following factors except.
Um, I feel like it's the economic character of the community because the makeup of the community, I mean, or D, but I don't think it's A or C because they're asking me what like what would be involved in qualitative, right?
Yeah, well, I think does the tax base of the Q community determine or can be a determining factor in the quality of the bonds? I say yes. Does the economic character of the community a quality factor or determine quality of the bond? I'm going to say yes. Does the whether you buy them in $250 increments or $1,000 increments or $25,000 increments, does that
Yeah.
have anything to do with the determination of the quality of the bond? I say no.
Oh, you don't think it's the dollar
Yeah,
denomination
I think it's C, but with makeup of the community's population, I think that's going to be qualitative. So I could get it
makeup
wrong, but I'm saying C. What do you want to say?
of the community's population? Like how many
Yeah, well, yeah, like there's 10 people that live in the town, and or there's 10 million people live in the town.
versus the dollar denomination of the bonds to be issued?
Yeah, I'm just using here, and I could get it wrong, but I'm using the Sesame Street trick.
Mhm.
One of these things to me is different than the other, and to me, the thing that's different is the C.
I'm gonna still, I
What do you want? And by the way, the other thing I'm going to using my test taking trick. And I do tell you, I get heat for that, but here's community, community, community. Right? This is the only one that doesn't have community in it.
I'm gonna just, I deserve to get it wrong. Put
Okay.
D.
So what you want to go?
Go D.
Yeah. Hey, please know we've been, this isn't our first rodeo, and you have got questions right on some of these practice tests we've done, and I've got them wrong. So, stump the tutor. Even tutors don't get everything right.
You're probably
And
gonna
if,
get
well, we'll see. We'll see. An investor purchased 1,000 shares of XYZ. By the way, that's fun for people who are watching when the tutor gets stumped. They're like, "Oh, right, I haven't seen a lot of the questions when we're doing these kind of ones, so who knows, right? Who knows?" An investor purchased 1,000 shares of XYZ at November 1st, 1850 per share. A few days later, you sold five call options at a premium of 2.5. On December 15th, XYZ is trading at 25.50 and the five call options are exercised. The cost basis of the stock is, this is a tough one.
Oh God. Okay. Purchases 1,000 shares. So November 1st at 1850. Okay. Sold five call options with a premium. Okay. 1850. I um I want to go with like 16.
Well, this is a real tough one.
Hold
Covered
on.
calls, your cost basis is what you paid for the stock.
Yeah.
And then the sales proceeds would be the 25, the premium, 2.5 plus the strike price, which was in this case the call. Where did they tell us the strike price? Did I miss something here? The five call options are exercised.
November 1st at 1850.
Yeah, did they tell? Yeah, it's going to be 1850. I'm just wondering where they're telling us the strike price. I guess it doesn't matter to answer the question, but
Okay.
but yeah. So
I was just looking at it like stock, like
I
cost.
think what you gave me is the more likely question, and what you gave me is break even.
Yeah, I gave you the break
Yeah,
even.
and more often than not, cost basis does follow break even. In covered calls, it does not. I think it's more likely you're going to get the break even than you are going to get the cost basis.
Okay. Well, you know that I know that.
I know you know that. You're good at options and you're going to get the credit for it. So, one of
Okay.
your clients wants to withdraw $30,000 from his traditional IRA. He's 35 years old and needs the cash for a medical emergency. You should advise your client.
They're allowed to take money out for qualified, like for a first time home buyer,
Yeah.
for to open a line. They must be able to do this penalty free. I I partially, it's a medical emergency.
Yeah. I wish they gave us more for that. But yeah, it sounds like it's going to qualify for a hardship withdrawal, I would think.
Yeah, they would not need to be replaced. They may be able to do this penalty free, but should verify with their tax advisor. Okay, I know it's not open a line of credit, and I know
I'm with you.
I don't think it's going to be need to be replaced in 60 days.
Yeah,
And
particularly if he's having a medical emergency. Yeah, you better be off your deathbed in 60 days.
I don't think it's that. I think it's either he's going to get taxed to take
Yeah,
it out, or he's going to be able to do it penalty free. But I
yep,
don't know what the medical emergency is.
yep.
And who's to say that you're not to have multiple medical emergencies? So then can you
Yeah,
just
I'm with you. I'm with you.
out
I think
tax
it's tough.
free? Oh, this
We'll
is hard.
flag it. What you gonna go for? Your 10% or your penalty free?
I'm gonna go 10%.
Okay, I'm gonna go penalty free, and we'll see what happens. I think you could very well be right. If you're right, it's going to be because we don't know more about this, right?
But
We
like,
don't know
I
about.
know you get qualified distributions that are
Yeah,
free, yes, but like for like you know how there's the first time home buyer,
oh,
like
yeah,
you're only
yeah.
gonna buy a
Mhm.
home once, and that's when you get that for
That's
free.
right.
You had multiple medical emergencies. Can you just always
Yeah.
take IRA?
A register rep prepares a summary of the preliminary prospectus, which contains no unverified claims or statements. The registered rep can send the summary to the customers.
Okay, he prepares a summary of preliminary which contains no unverified claims or statements. Um, I'm pretty sure you can send it out if it doesn't have unverified claims or statements.
Well, think about what this says. A registered rep
Prepare.
prepares not a summary prospectus. No, this is not a summary prospectus. You have prepared a summary of,
Oh yeah, you can't do that. You cannot
yeah,
do.
yeah,
Oh no, big no.
Knopman, you bastards. Try it
How
on. You
these
know,
questions are really throwing.
I'm just kidding, guys and gals. Knopman team. Broker Dealer H has joined the underwriting team as a selling group member for the IPO of Company K. Broker Dealer H.
See, he has no financial
Yeah,
liability.
you got to get those aim and shoot point click ones like that.
Well, thank God we had. Oh my God.
And a margin account is showing the following: long market value 30, debit 12, credit 62, SMA 38.
All right, I'm gonna start writing some stuff down. Um, okay, debit is 12,000. Okay. And then credit balance is 62,000. And then 38,000. Okay. So let me just take out my calculator. Um, And now, okay. Okay. All right. So I have 18,000 for equity on the short
Yeah,
account,
so we got 3,000 SMA over there. You're correct.
wall market value, and then for the short, I have 24,000.
Right on.
And
And then half of the market value is,
half of, are we talking about for the long account?
yeah, for no, for the short account. You already told me the long account, I think, didn't you?
Oh, yeah. Okay, hold on. So 10,000. Okay. Let me just, sorry, I'm like writing it out.
Yeah, no, I think it's a good one.
And 24. I'm feeling like it could be 5, but I'm still like solving it. Hold on.
Okay, yeah, no, it's the key is remember to do our classical margin equation.
So I have 3,000 on the long and then 5,000.
Yeah,
So 8,000?
yep, that's correct.
That was the longest problem.
Yeah, well, you just got to stick with it, right? So the key is to do what is the SMA, right? So we have your point, we have 3,000 long excess equity and we got 5,000 short excess equity. And so that's a total of 8. So that means we can have 8,000 cash, or how many securities can we buy ourselves short without making any kind of a deposit?
Okay. Yeah, I just like
16 grand, right? You're buying or selling bars 2 times your SMA.
margin.
Yeah.
Couple margin questions so far.
Well, we only one like that. That was a nasty one, but a FINRA member firm may place a temporary hold on the disbursement of funds from a customer's account if,
Um, I think there's a reasonable belief that financial exploitation is occurring within the account.
yeah, that's right. Remember, boom.
The way that these questions are, it's like it's almost like you want to click multiple, like the
Yeah,
way.
no, a member firm temporary hold on disbursements if the customer has issued a margin maintenance call by the firm. A customer has not made payment for securities during the prior 2 weeks. The account has become restricted. Yeah, I think that's the best answer. I'm with you. I wish it had more information, like there's a trusted contact person and we're going to do a wellness check or whatever. But a corporate bond with a coupon of 4 and a yield to maturity at 4.5 is currently trading at, I know you're going to get this one.
A discount.
Right on, teeter-totter seesaw. Client placed an order with his RR to purchase 700 shares of ABC at 21. The trade was executed, and the client received a confirmation the trade was executed at 31. Upon receiving notification of the error, the RR should,
B, report the error to his branch manager,
right
principal.
on. I was looking, you're ahead of the tutor again. I was looking for a question that didn't show, which is that error in execution, the brokerage firm is liable, error in report, the customer is obligated. Carla has an account with you and she's traveling this week. Her husband, Cliff, would like to place a trade for her. He calls you with his instructions. You should tell him.
So Carla has an account with you. He's
Please
not
note,
allowed
Carla has an account with you.
he's not allowed to do that.
That's right on. Say sorry,
Carla can. She's the only one on the account.
yeah, unless he gets a trading authorization. An investor may begin taking distributions from his qualified retirement plan this year without incurring a penalty. Once distributions begin,
Okay. He begins taking without incurring. Um so it's qualified, so it's pre-tax.
that's right.
So it's gonna be ordinary income.
Yep, on everything, right?
Mm-hmm.
Which of the following statements regarding IRAs is not true?
An investor of any age can contribute. Yeah, that's true. Distributions may begin at 59 and a half and must begin the year after. I think that's also true. Within 60 days. Yep, I think that's also true. Is it the cash value life insurance is permissible in an IRA investment?
Yeah, that's just excuse my language. I think that's just bullshit. I've never even heard of that.
But the other three are correct, right? Or am I?
That's why I think that's B, right? So
Yes.
what I always tell people is make sure you don't lock onto the stuff that's the BS. What you want to know is what is true. And I always recommend in situations like this, maybe making a poor man's flashcard. Knopman makes it easy for you to print this out as a PDF. And assuming you're not killing new trees, you might want to consider turning this into what I call a poor man's flashcard. What I do is get rid of the not true, right? Because we don't want to study things that are false. I get rid of the statement that is not true. And now your point, now you have a pretty good poor man's flashcard. These are things that are true, things that you should know. And maybe you can print this out. Maybe, I don't know. I hopefully it doesn't print 1 page per question. But if it did, right, you could have this as what I call poor man's flashcard.
All righty.
Max Jones writes one ABC, July 50, put at 7. The put is exercised when the market price is 40. For tax purposes, what is the effective cost basis of the stock put to the writer?
Is it 43?
Yeah, right. You're buying it at 50 and you got the 7, right? As a result of a series of trades this year, an investor has amassed 7,500 in capital losses. If the investor's ordinary income was 85, they would be able to.
They can deduct 3,000
Yep,
from
you're correct. So now, so how are you going to answer
now
me?
just wouldn't it be 82?
Yeah, right on.
Okay.
Well, you're getting less of this. I think you made the right choice. I don't believe in if you have the resources, which you do, to get multiple vendors, it's good to get those multiple vendors to get confirmation of test issues. So you're not getting as many aim and shoot point and clicks as you have in some of your other test prep vendors because again, it's changed a little bit. But what you are getting, I think, is confirmation of those test issues. And so on the stuff you are getting aim and shoot point and click, you're still getting it aim and shoot point and click. And you're just getting less of it in this particular benchmark exam, which is kind of tough.
Yeah, some of the questions are just worded really differently in it.
Yeah. Yeah.
So,
Which of the following is considered an accredited investor?
mm, so an individual with net worth of which, so it's 1 million in their primary residence.
That's right. So A is out.
And a married couple, 200, that is not.
That's out.
A board member of the company is.
Yeah, right. Because they want you to put your own money into your own deal. So an insider of the issuer is a credit. Primary investment objective of a client is to save for the education of the newborn child. To help the client achieve this goal, the registered rep handling the account would be most likely to suggest which of the following investment products to the client.
That'd be the strip.
Absolutely. Boom. Records prepared by a broker dealer that do not have a defined period for record keeping.
Um, records prepared by a broker dealer that do not have a defined period.
Yeah, so the FINRA hasn't said if it's lifetime 6 or 3.
Pretty sure you have to keep like pretty much everything for 3.
There you go. Right. So what you got 2 3-year choices.
Must be stored in a digital file and discarded using FINRA's approved shredding service. What
I'm
the heck?
laughing because
Yeah, B.
yeah, what are you going for? B, I hope, right?
Yeah, B. What is that?
Yeah, the
There's
reason I'm
shredding
laughing
service?
is because I get every once in a while somebody gets really mad at me for saying derogatory things like, yes, I don't think it's derogatory about FINRA and how sometimes I do think they're just after more money. So I'm laughing because I could see FINRA rolling out an official FINRA shredder that you must use. A customer has been notified that the limit order placed at the open this morning has been executed. The trade report submitted to FINRA may exclude the following items.
Okay, so it has to have the execution price. It has to have the number of shares. I'm pretty sure it has to have the symbol.
Yeah, I like that. I like how you attack that one. That's exactly the way to go about it. Right.
Commission.
FINRA doesn't really care about that commission just as long as it's fair and reasonable and doesn't, if it goes over 5%, you have some reason. So yeah, I think that's a pretty good answer. Which of the following retirement plans does not allow tax deductible contributions?
Oh dear. So for traditional does, I think.
You're correct.
401k is qualified.
That's right.
403b is qualified, and I'm
Right on.
pretty sure you can take from both of those. So the Roth.
You're right on. Good job. Client wants her account designated by number, not her name. The registered rep.
B.
Right on. Letter attesting to ownership. Corporate bond makes semi-annual interest payments of $5 and is currently trading at 960. What is the current yield?
5.20 D.
Yep, yeah, you're ahead of me again on the math, so yeah, correct.
Cool.
Quantitative measures for evaluating the credit quality of corporate bonds would include all the following except.
I think it's industry stability because I think it's
Yeah,
all the other things.
yeah, okay, we'll see. I'm not sure if I want that one or yields, all the following except. So yeah, that's a tough
But
one. Find out.
flag that.
A 77-year-old client has historically adopted an aggressive investment attitude, but when the client recently called to place a trade, he seemed very confused. The RR should.
Notify the trusted contact person on the account.
Yeah, and boom. A 28-year-old individual with a high risk tolerance seeking a strong return from investment may wish to consider.
With a high risk tolerance, she wants a large cap stock fund.
Why are you on large cap?
Not large cap, sorry, small cap. I know it. I know the
Okay,
difference.
I
I
was going to
caught
say,
myself.
I think strong, yeah.
I was just like thinking 28. I was like, she'll want a lot of equity and
Yeah,
that.
yeah, you're putting yourself into the question, huh? In
Yeah.
November, Bill purchased a Blast Inc. March 30 call and sold a Blast Inc. December 30 call.
Uh-huh.
Uh, the trade will benefit Bill if
I think it's the spread narrows because
you're
December would
correct.
be the dominant on
Right.
a
You're absolutely right.
calendar spread.
Lower, higher, longer, lower, higher, longer. Longer term option contracts always have greater premiums. You sold the December, it's a credit spread, and you're correct. By the way, the other way we could have tossed out C and D, or well, no, minute we couldn't. I was going to say we could have got probably tossed out if the spread narrows.
You could have tossed out the neutral
Yeah, it'll be
and
interesting
higher
because yeah, let's see. The trade will benefit Bill if the spread
because
narrows. Yeah,
reading the question, you know that they're talking about a calendar spread. So that
that's
what
exactly
I'm
right.
testing you automatically on is between A and C.
Yeah, right on. A customer margin account contains the following registered non-exempt securities: 100 shares of EWH at 40, 100 shares of XYZ at 50, 100 shares of ABC at 80. The account has a debit balance of 10.8, and the initial margin requirement is 50%. How much equity is in this account?
I'm just gonna have to get my calculator out.
Yeah, so
So start doing them all. 4,000. Okay. 4,000 and 100. So 5 and they have a debit balance. Okay. Debit balance. Hold on 1 second. Did you multiply all of the shares to get the? I might get this one wrong, but I'm between B. Is it right? Did I do it right? Hello? I can't hear you at all.
sorry, I turned it off just for a second. My bad.
Um,
Um, 4 grand, 5 grand, 8 grand. I think that's 17 grand, right?
Yeah, that's what
Minus
I.
10.8. So 10.8, boom, the 50%'s there just to screw you
So
up.
I did it right.
Yay, woo!
Go.
Registrap sees a posting online concerning one of her customers who, according to the post, has recently passed away. What is the first step the RR should take?
Um, I mean, I would attempt to verify that she
Yeah,
actually
you
passed
better
away.
make sure. Yeah. Facebook, can you believe this? There are people that just wake up and try and take advantage of seniors like my mom. So I was in a tutoring session, and I don't know if I mentioned to you, I'm going to get a pickup truck for my off-grid location. And mom sends me a text from her friend whose daughter has cancer and they need to sell their truck. And she sends me this beautiful picture of this truck that should be like, 100,000, too good to be true. It is. And they only want 7 grand. And I texted mom back. I said, I'll take it. And then all of a sudden, mom tells me they want 3,500 that they'll give me back if I don't like the truck when I get there. And I go, so mom, who is this again? And she goes, oh, yeah, it's from Facebook. I said, Mom, has somebody actually taken over their account? Do we really know this person is dead? And can you call your friend? And it was a major scam. I told my brother that I didn't fall for it. I didn't send anybody 3,500 bucks because he told me he had a friend who actually sent 5,000. It was the same exact thing. They had hijacked the Facebook account and said they had a death in the family and they need to raise money for medical expenses. I was like, oh my God, always some new scam going around. Right? So when I see this, I go, well, who knows? That could be somebody who's hijacked the account. State governments receive the least amount of revenue from
The state.
the state of Florida, the state of California receives the least amount of revenue from.
Well, I feel like vehicle registrations is like true.
They get a lot of money. Usually they split that a third, a third, a third, like, third for
Yeah.
the state, third for
And
the
then
local.
property, I think, is true.
State governments, do you
Oh,
pay
no,
property?
sorry, not property.
My
I-
property taxes are local government.
Yeah, I knew that.
When the general partner signs a subscription agreement, this indicates,
The acceptance of the limited partner,
yeah, welcome to the partnership. Woohoo.
or at least that's what I think.
Yeah, it's invest. I used to use that when people would sign up. It'd say, you've been admitted. An
If no,
investor's primary goal is liquidity. Which of the following should be de-emphasized in their portfolio?
that would be the direct participation.
Absolutely, very illiquid. A client has recently experienced a surge in her monthly expenses. The registered penalty account might suggest which of the following products to this client.
What does she mean by a surge?
I have no idea. I think the key is she could use monthly income is how I am thinking of this. So I could be wrong, but a client has recently experienced monthly expenses. So she suggests which of the following products to a client.
I don't think it's B, C, or D. I would probably go agency C.
Because mortgage payments or pass-throughs are done monthly. We'll see. Yeah, I think that's the best. Now, I would prefer it had a Ginnie Mae here instead of a CMO, but yeah, is what it is.
Okay.
In order for a person associated with a FINRA member firm to open a securities account at a different FINRA member firm,
I know that they need to provide written notice.
right on, right? And then your firm either
Um,
that'll be okay or that won't be okay.
yeah, I'm trying to think because I'm pretty sure you might, I don't know if you need like necessarily permission or you just need to tell them, hey, and then open at the
Yeah,
new.
and then what happens is then they will follow any instructions they receive from your employing firm.
Yeah, okay.
A client looking to invest in a mortgage-backed instrument and mitigate prepayment risk should consider,
CMO.
right on, yeah. That's the whole point of carving it up, right? Some people have less prepayment risk, some people have more. A client has a restricted margin account. To place additional trades in the account, the client would,
Is a restricted account. Um, I feel like it could be B, or C.
so remember, restricted just means you're below 50% equity. That's all that means.
So then you'd need to satisfy the appropriate margin
Yeah, I
requirement.
think that's going to be the answer. Remember, you can only have half of the proceeds. But A is nonsensical. You got to top off the account. No, you get back to being 50%. Nobody's going to make you do that. The
Yeah.
client can no longer has access to margin. No. The very nature of you putting up 50 for the next trade will bring the margin, the equity back up towards 50. Right. So I think it's D. We'll see. We'll flag that one. I think it's a municipal bond issued by the state of New York would not use which of the following items for debt service.
Didn't we just talk about this?
We certainly did. So it would be bad form to miss it.
The property tag.
You're right on. Joan has purchased a put and a call on the same index.
Uh-huh.
Both in strike and expiration, she's created.
Long straddle.
Right on. A client purchased a variable annuity some years ago and is planning on taking distributions beginning next year. Until distributions from the annuity begin, the tax consequences of the growth of the annuity are,
She's planning on taking distributions next year, but until they begin,
that's the
isn't
key
the
phrase.
growth, isn't the growth in the annuity uh ordinary and I'm kind of between it's ordinary income or it's not subject to
Yeah,
tax.
it's going to be ordinary when she
I don't
takes it.
think. Yeah, okay, that's what I thought.
Yeah, it's growing tax deferred.
Okay.
Two institution affected 100,000 share trade in XYZ. A New York Stock Exchange listed security at 11:15 a.m. Eastern time. This trade,
Those have to go to the consolidated tape within 10 seconds of execution.
right on.
That I recently studied, literally last night.
All the following would indicate deteriorating credit conditions, except an increase in.
The assessed
Yeah,
valuations.
kind of that's kind of a stupid question. In a variable life contract, the minimum death benefit.
Okay, the minimum death benefit. The death benefit, I think, fluctuates based on the separate account.
That's right.
So, okay. Because
A
you
client
can,
opened a new option account today. Which of the following actions must the client take within 15 days of account approval?
what do they have to do?
Yeah,
Um, return to signed copy, read the options disclosure, and send an acknowledgement. Place the initial. Isn't it the initial trade? Or hold on, let me just reread this again. Okay, a client opened a new options account today. Which of the following must the client take? Is it C?
right on.
Okay, thank God. I
What if
think
it's late?
what?
What if it is late?
Then they can't trade, right?
All they can do is closing
Closing transactions, yeah, purchase.
transactions. A tranche of a CMO has an average life of 2.5 years. Tranche B has an average life of 6, while Tranche C has an average life of 11. This type of CM structure is characterized as,
Um, I don't think it's plain vanilla.
yeah,
I don't think it's floating rate either.
no, I don't either.
I'm gonna go planned
I
amortization.
think so. I think that's the best answer given the answer set. The money
Ugh,
contributed to a SEP vests.
doesn't that vest immediately?
Yeah, that's how most of them are going to work, right?
If I get it wrong, I get it wrong.
Yeah, ABC Securities is launching a new variable new product next year, is in the process of finalizing the marketing campaign for the launch. Which of the following product descriptions should ABC use in its public communication regarding this product?
Um, ABC is launching a new variable and is in the process of finalizing the ABC variable product for your retirement years, the ABC retirement planner, the ABC life insurance product for your future, the ABC variable annuity. Um, insurance. Is it D?
I'm going to go with D. We'll see. I think D is the best answer given the
Yeah,
answers.
me too.
I don't particularly care for the question, but that's the best answer given the answers. The VIX is a measure of market volatility based on very testable.
The S&P.
Yep, and that is choice A, right?
Mhm.
A customer of the firm has recently become married and now wishes to change the name on the account. This change will be accomplished when,
Um, is authorized by the registered principal.
right? If a registered rep participates in an internet chat room,
Um, the representative, may not present a hypothetical illustration of math. Like if they're in a chat room, like the only thing I know is that it's defined, it could be defined as retail communication because you
yeah,
don't.
I think this would mainly be whatever the firm's WSPs are about it. But yeah, we know that it's not A. We know it's not B. And so I think we're left with C or D, and then we got to decide which of those are more common sense.
Maybe like C.
Yeah, I think so. Given that answer set, I think that's the best answer.
Okay.
A treasury bond is quoted at 10, 101, 12, 101, 20. The client asks her, what is the spread? You would respond by saying,
Um, well, I need to do it really quick and then I can let you know. Um, is it 250?
right on. A life cycle fund would best be characterized as one which,
The continuously realigns its asset allocation as the investor ages, I believe.
yeah. A lot of times these mutual fund questions are truth and labeling, right? If whatever you call your fund, well, that's kind of what you got to do.
Yeah.
A registered rep currently has a client who's held a particular variable annuity for the past 4 years. Client's unhappy with the performance of the separate account and asks you to recommend some alternative. Which of the following would be the most appropriate course of action?
Um, the rep should examine suitability of alternative investment vehicles in conjunction with the um uh I think it's B.
Yeah, that seems like the most reasonable
But
answer.
like once annuities are annuitized,
Well, yeah,
like
there's no going backwards at that point.
yeah. Okay.
So yeah, I
Yeah,
think B is the best answer.
that's what I think.
Corporate client has an equity portfolio valued at 10 million. It has a beta of 1.4. There are SPX May 2000 options available. To adequately hedge the portfolio, the client should.
I have no idea how to solve
Well,
this.
I would, so I'm gonna, a lot of times on math, what I should do, and I'm not sure this is, it's a buffet, take what you like, leave what you don't. What I'm gonna do is say, I need to overweight this thing. And I
So
got to overweight it by 1.4. So I should know that I'm buying puts.
yeah, I was about to say I know that I'm buying puts and I think it's
Okay,
going to
so
be 7.
now if I take the 2000 times 50, that's the 10 million. But I need to overweight it. So I'm going to say I need to overweight it by
I
buying
was
some more
just about to
puts.
say, just like reading it, I knew we were buying puts and I wanted C. So,
Yeah, there you go. So in a
and if
custodial account, taxes are the liability of,
the minor,
right on. Real-time commentary posted to a broker-dealer social media page by a registered rep must be,
real-time commentary posted, um, return for 3 years and subject to ongoing review, reviewed by the firm's director, retained, approved by principal of the firm and retained at least 30 days. Some, like I'm between A and C,
yeah, you,
but
you
I think
can't
it's,
have a 30-day record. There's
I
no
was about
such
to say
thing.
you can't keep it for 30
Well,
days. So I would,
there's no category called 30 days, right? What you'd be saying is that you could get rid of this in 30 days and there's no 30-day bucket, right?
mm,
In a margin account, which of the following events would not cause an increase in the SMA?
I'm gonna probably get this wrong because I will be transparent. I'm gonna guess
Yep,
just because margin's my weakest area.
yep.
I'm just gonna go uh, a forward stock split.
You're correct. All right. All those other things would
Oh,
pay down the debit, right?
okay.
You sell stock, you pay down the debit, equity goes up. You send me cash, equity goes up. You give me more collateral, equity goes up. They do a 2-for-1 split, market value doesn't change. A customer maintains a non-discretionary account at a broker-dealer and leaves a voicemail message for his registered rep to execute a trade. Specifics of the order left in the message. The rep may execute this order.
Um, Maintains a non-discretionary. I mean, if he got if he got the voicemail during normal market hours,
Yeah, as long as we're sure it's him, I'm with you. Another funky one.
I don't know. I kind of think that you need like principal.
Upon receiving confirmation from the customer that this order should be executed, may execute upon receiving confirmation from the customer that this order should. What do you like? Go, Chuck,
I
go
like
with our principal.
I, I like A or B.
Primarily, yeah, I'm gonna go. You're gonna go A or B. Make your pick, and then I'll make my pick.
Has non-discretionary account at a broker dealer and leaves a voicemail. The thing is, like, obviously, I'm making this more complicated, but you can't confirm nor deny on a voicemail that that was for sure his voice.
Yeah, yeah, that's kind of where I'm
I
going. I'm going with most firms tell you specifically that you don't leave us a voicemail because we're not going to do anything.
Right. So I almost feel like it's like the immediately following approval, or I don't know. If the
Well, let's
order
pick one. So what do you want? You
instructions
got to pick one.
specifically if the order instruction specifically indicates it's a good till cancel upon receiving confirmation of this. Um, I'm gonna go A, even though I just don't like
Okay, I'm going C. Let's see what happens.
I don't like this question.
Which of the following exposes the customer to the greatest risk? I like this one.
Shorting a put.
Long 100,000 shares of ABC. They don't give us the price. Short 5,000 shares of DEF. Long a 40 DEF call. Long 200 shares of 5 long puts. Short a
Yeah.
put. I'm going to
Yeah.
say B because I need, what do I need? 50 call contracts. One isn't going to get it done.
All right, just flag it.
Yeah.
I kind of spoke on impulse.
An investor owns 500 shares of ABC has received a 2% stock dividend. This investor,
When you have a stock dividend, there's not a tax
that's
liability
correct.
on the additional shares. So I'm gonna go with no income tax liability on the 10 new shares. I just need to find out if it's 10. I think it is, right?
Yeah. Well, I'm yours. Yeah. Do the math.
Yep, it's 10. So it's D. Hello?
All right. Making sure mom's all right. I just heard a big crash.
Oh, she okay?
Yeah. You see, they said she's okay. All right. So investor owns 500 shares. Where are you going to go with?
D.
Yep. You're correct. Which of the line would not be used as collateral in a CMO?
A.
Right on. Now you're getting some of your aim and shoot point and clicks.
Thank God.
XYZ Securities is developing a new structured product, which is being built with a 0% floor. In the event the underlying security declines in value post the launch of the structured product, the return of the new product.
What the heck? Securities is developing a new structured product which being built with a 0% floor.
Yeah, I have no idea what this question's about. So my guess is going to be that we're doing something like an equity indexed annuity or something. So I'm going to say A, but I have no idea what they're asking about here.
Will increase at a slower rate based on the level of decline of the underlying security, can never fall before par value, could decline based on the algorithm, but I don't know. I'm kind of between A, B, or C.
Yeah, I'm going for A. What are you going to go for?
I don't know. I think I'm gonna go for um maybe uh I'm between B and C. I don't think it's A. Um B. I'm
An
probably going.
investor seeking a high degree of cash flow predictability while being willing to accept relatively lower yields would most likely purchase.
Is that the pack?
Yeah, the ones that have the early cash flows have more predictability, right on. An investor has created a bull call debit spread. The investor has.
A bull call debit.
That's right. So to create the debit and to have be bullish.
So purchase the contract with the higher strike. False.
That's correct. That's false.
Hold the contract with the higher strike and purchase the B. It could be B.
Yeah, you got it right. Lower strike. Bulls, you're long the lower strike. Lower strike call is going to have the greater premium. And a lower strike call is the dominant leg, and that's bullish. So yeah. Lower, higher, longer. With the initial margin requirement of 50%, a customer purchased $100 per share and deposited 5 grand. It then increases to 150. What is the excess equity in the account?
All right. I'm gonna get my calculator out.
Right on.
Okay. Um, Initial margin requirement 50%. So, okay. Okay, so um, did you get 2,500?
I do indeed. Good job. Right.
Okay, there you
So we
go.
bought that. We have a $5,000 debit, right?
Mhm.
And then it says 150. So 15,000 minus the 5 is 10. Half of 15 is 7,500. You got 2,500 in excess equity. That's 2 margin questions you got right. So you gotta stop beating yourself up that you don't know margin. So far, you're doing pretty good on margin questions. Broker-dealer A is distributing a research report prepared by broker-dealer B, covering ABC and XYZ. ABC and XYZ have been on broker-dealer's A coverage list for several years, and the ratings have fluctuated. Which of the following items is not required to appear in this research report?
Is it the fact that or I guess you have to let them know that it was prepared by broker dealer.
Yeah, prepared by broker-dealer B. Yeah, I think that's correct, right? You gotta,
Description of the rating system you need.
yeah.
The existence of investment banking business that broker dealer A with I'm kind of between that one and then the price target.
I like that one. I think you're on the right track.
Maybe it's D because I feel like you could have a price target in the research report.
Yeah, you could. It says which of the following is not required. So it doesn't.
Oh, the so A, you don't need it.
Yeah, I don't think. Yeah, I don't think you have to go over a price target. Zach has sold a 65 put for 7, a 55 call for 7. When
Okay.
XYZ is trading at 62, he closes out the positions at intrinsic value.
Yeah.
Zach has.
May and then a May 55 call. Um, Put and a call. Okay. For 7. So that's gonna be this is a straddle.
Yeah, it's a straddle with different strike prices called a combination.
Yeah, I knew that. So it's a combination. And that's gonna be 17. So intrinsic value.
Yeah.
I think it's 400.
Okay, you're correct. So loss or gain?
When you sell, is it the $400 gain at loss?
Well, you tell me.
Um, I just need to talk myself through this for a sec.
Okay.
Okay, so which one's strong? Um, okay, so and you sell it. So you I want to say I'm like leaning towards gain, but I feel like it could also be loss. I just need to do my T because I did this fully in my head. So,
Yeah, and you got the 4 right away, which I was pleased with. I mean, that was good that you got that.
yep.
And now it says you close out an intrinsic value. So what's the intrinsic value of a 65 put with the stock at 62? What's the intrinsic value of a 55 call with the stock at 62? So you were right that it was 14 and 10, and you were right about the 4. And
Yeah.
then I asked you, okay, which one are you picking? Are you picking A or are you picking C?
I would hate to get this wrong just because I know I got the math right.
Well, yeah, you're pretty good at options. So, your point you did in your head. I don't know why you didn't make a T. So is the 7 points, is that money out or money in?
That's money out.
And the 7 points for the call, money out or money in?
Oh, it's a gain.
If you paid 14,
Oh, and then okay.
you close out at intrinsic value. So you paid 14.
Loss.
Yeah, and you brought in 10. You're unhappy.
Sorry, I think doing it in my head really messed that one up for
Well,
me.
well, get your T fired up. Get your T fired up. You did the math correctly because you in your head you said 14 and 10, and you told me 4, but then you said you wanted that. Right? You got to make sure you get the right version of that.
You can
In
mark
the
me.
client's margin account, a dividend of $150 was credited, while during the same period, an interest charge of 85 was applied. The effect on these actions is,
A dividend was created. So a dividend was created while during the same period an interest charge of 85 was applied. Um, so they're saying an interest charge of 80. Is that going to be an increase?
well, if you got $150 coming in, I'm going to pay down what you owe the firm.
So an
And then
interest
you owe the firm $85.
so a reduction to the debit balance of
Yep.
85.
Well, if we net 150, 150 came in,
Oh, well,
minus 85.
mark me wrong. Mark me
Yeah,
C.
right.
But
It's gonna that's a tough one. That's a tough one.
yeah.
The following positions are held in the customer account. Long XYZ May 50 call, short 2 XYZ May 60 calls, long 1 XYZ May 70 call. These option positions would be characterized as,
Is that a butterfly spread?
it certainly is. I have no idea why nobody has seen this on the actual Series 7, but that's what that is, right? You gotta, the wings are the outside things on that. Which of mine is not a benefit to an investor in a direct participation program?
Well, intangible drilling costs could be.
That's correct.
Depreciation. I don't know if that would be. Recapture could be. Depletion. I'm between A and D,
Uh, remember, it says a benefit.
which is not a benefit. So recapture?
Yeah, remember, that's not good. That means you owe taxes. I said, we said it was worth X, now it's worth Y, and now you've recaptured that and you owe taxes on it. So A, C, and D are potential tax benefits. B is not a tax benefit. That's not bueno. Which of the following factors is least important when evaluating a direct participation program?
Which of the fun? Recent tax law changes, economic soundness of the program, expertise of the general partner, basic objectives of the program.
Yeah, this is a funky one. This answer set, I'm going to just go through the answer set here and say, okay, well, I guess I got to rate these things.
Okay, so which of the following factors is the
I
least
kind of like what they're getting at. We'll assume it, see if we get this right, but I think when we get the rationale, I like the takeaway from the question, and I'll tell you what I think the takeaway is. And
Okay.
then we
Well,
get it answered.
I've never had a question like this, so I'm probably going to get this one wrong. Which of the following factors is the least important? Um, is it the expertise of the general partner?
I'm going to say that that is important. I am going to say that is important.
Okay.
And I think what they're going to tell us is that we shouldn't let the tax tail wag the investment dog, that our tax consideration should be important, but not the driving force to the transaction. So I think the answer is going to be A, but I had to bring that to the question. I don't think that's in the question anywhere, but I'm going to say A, and we'll see how what happens. Oh my goodness. Wow.
This. Oh my God. Okay. Okay. So long and short a call. That is a spread. Long a call. No. Long and short a call. That is long a call and 1 and 3.
Excellent. 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 An investor anticipating the Federal Reserve Board would likely to increase its target Fed funds rate would likely take which of the following actions?
Buy calls.
Yeah. Are you going to buy? Yeah. If an investment, if it would like to increase its target, it would likely take which of the following actions? So what's your answer here? I think you're on the right track, but you got to figure this out. This is a real tough one.
I'm gonna go with the euro, not the US.
Yeah. Okay. So are you going to buy a call or buy a put?
Buy a call.
I think you're going to miss that. And here's why. When
Well,
interest rates go up, the dollar becomes stronger.
oh, because of the federal. All right,
Yeah, so
that
I
wasn't
think it's going to be
fair.
D, right? We're gonna
That
we're
wasn't
gonna buy
fair.
puts on the euro because if the dollar goes up, the euro is going down. That's a
That
tough one, real tough one.
I didn't like that one at all.
Yeah, I'm with you. Client is a beneficiary of a securities from the estate of their brother who recently passed away. The cost base of inherited securities is.
Okay, so the client is a beneficiary of securities.
This is very much a test question.
It's the market value at the time of the death.
Right on, step up, right on.
Step up.
A measurement of a portfolio's manager's performance and compared to the market as a whole can best be described in terms of
Isn't that beta?
a measurement of portfolio's manager performance in relationship to the overall market can best be described in terms of. I'm going to go with alpha. I think it could be
Yeah,
either.
sorry, go back because it wasn't talking about volatility.
Yeah, it's performance in relationship to the market, seeking
Yeah,
alpha. So I think it's
go
alpha.
alpha. Yeah, I knew that
Prior to
one.
purchasing a new municipal offering, the client is inquiring as the best resource available to help evaluate the credit quality of the issuer. The RR should direct the client to,
Okay, so he's purchasing. Wouldn't that be the official statement?
that's the only one that makes any sense whatsoever.
Okay.
The working capital of ABC will decrease when it,
Ooh, isn't that when they declare the cash
yeah,
dividend?
remember we had one of those earlier, right on. In September, an investor writes two ABC January 60 puts at 3. If the investor buys the puts back at 4.5, the result for tax purposes is.
Part of me wants to say it's 150
Yeah,
capital.
well, remember though, you got two of them.
Yeah, so 300 capital loss.
There you go. Boom. Marjorie purchased 20. Boy, we're starting to get in some options.
Thank
20
God.
XYZ July 50 puts when the stock was trading at 51.50. Who cares? She paid $1.75 for each put. We may or may not care. Subsequently, XYZ declines and she decides to exercise 10 of her puts. For tax purposes, her sales proceeds from the exercise price of her puts is.
That's a really weird question. Hold on.
Funky. So we got to remember just to have to deal with 10 of them, right?
Yeah. So one.
And so it says she purchased them. So I mean, she's selling 1,000 shares at the strike price of 50,
Mm-hmm.
right? So that's going to be her sales proceeds minus the cost of the put.
Minus.
So that's going to be what? Where's the strike? 50 minus $1.75.
Yeah, it's 50 minus $1.75, which is 48.
I get 48.25, and we have 1,000 shares there.
Yep.
I say 48,250. Is that what you're going to say?
Yeah. A. I just got a little thrown off because of how many.
An investor purchases 10,000 ABC 3% corporate bonds. The bond was purchased at 98 and is callable beginning 2 years from the issue date. The customer's confirmation will show.
So it's at 98. So yield to maturity.
Right on, yield to worst. All the following statements regarding dollar cost averaging are true, except, and I like this, very testable.
Um, more shares are purchased when prices are lower. In sales literature, dollar cost averaging cannot be referred to as averaging the dollar. I have no idea about D.
I have no idea what these is either. I've never heard of such a
Is
thing.
it that dollar cost averaging results in a lower average cost per share?
That's true. That's why you do it. You're going to end up with a lower average cost of the underlying share.
Is it not available to large
I
investors?
don't, I've never heard that institutional investors are not allowed. What? I mean, you're
More
going to
shares
tell.
just when prices are lower.
That's true too. So I'm going to say D just because I don't know what the hell D is.
I'm gonna go, yeah, I'm between B and D, but we'll go D.
Okay, you're going to go D too.
Yeah, but I've never heard of it.
Which of the following would not be considered a defensive industry?
Construction, healthcare, food. Well, food is, right?
Of course, you got to eat regardless of the business cycle.
Healthcare is.
Definitely, you got to. If you're sick, you got to go see the doctor.
Utilities is.
Absolutely.
So construction.
Yeah, you could delay building a new building, right?
Yeah, it's construction.
XYZ has declared a cash dividend payable to holders as of record September 1st. Which of the following does not occur on the declared date? Does not occur.
Like what doesn't happen?
What doesn't happen?
Well, when they declare it, we know that current liability is increased and we know that capital is
Yeah,
reduced.
so which of the following events does not occur? You're correct.
So
The
then the
C
current
does occur.
so then current assets are reduced because that
Yeah,
happens when
that doesn't change. Right on. I like that. I would have answered that too. Working capital, what does not occur? Working capital is reduced. That is true. C is true. Retained earnings are reduced because that's where that's coming from. It's coming from your earnings. Remember that you're not leaving it in the corporate shell. When
right.
compared to traditional equities, ADRs have,
Um, they have um I think they have a lower level of political risk um and higher level. I know they have currency risk.
yeah, I'm with you. So it's either A or B.
But they have currency risk, but they're traded on exchanges, which means that they wouldn't have as much political risk.
Is that your answer?
Um, similar levels. I don't know if they have a high level of
Well,
political.
I may be bringing the old man baggage to the question, but I'm going to say it's A because we have like AMLO, the Presidente, former Mexico, and his new lady successor, and they're not capitalist friendly people.
Yeah, like I'm
Right.
between
So
those two. I just
yeah,
want
I'm
to.
with you. I'm with you. So now, if you're reading into this, well, they can't confiscate the shares that are in the bank of a foreign branch. I don't know. We'll see. I think it's saying, but let's see. We'll flag and see which one of us gets that right. We definitely know it has currency risk. An institutional investor is making a tender offer for common stock of ABC. During the period of this offer, the investor may not.
Well, all of the first three are in the secondary market.
That's true. I like that. So you're taking D. I like that. Yeah, you got to give people time to evaluate, right?
Because all the other ones are in the secondary,
I
and
like it. I like it. You're correct. And how many days does that tender offer have to be open?
20 and then 10 from
Right on, right on. With respect to a margin account, which of the following statements is correct?
interest charges, cash dividends and interest payments increase the debit balance. Interest charges and purchases using SMA will increase the debit. Interest charges will reduce the debit balance, assuming they're paid before the next statement period. I'm between a couple of them. Um, I don't think it could be D, but then again, it could be. They're reinvested. Cash dividends and interest payments increase the debit. Interest charges purchasing SMA will increase the debit balance. I really have no idea what this one could be. I'm not gonna lie.
Yeah, this is a tough one. It's B, right?
I was about to say it's like I'm like
Yeah, because remember what we're doing is here, that's going to be money you owe the firm. And then when you use your some SMA, we're lending you money, right?
I'll let you mark me wrong on that though. But
Okay. Well,
yeah.
but you got two onesies right. XYZ Corporation has current assets of 40 million, 20 million in inventory, total assets of 110, current
Oh,
liabilities of 10, and long-term debts of 50. What is the current ratio for XYZ Corporation?
okay, let's see. Has total okay, so first of all, the current ratio is going to be the current assets divided by the current
That's
liability.
correct. That's exactly correct.
So let's just see. So current assets is the 40 million divided by the 10, so 4-1.
Excellent.
4-1.
What if I asked you quick ratio?
Quick ratio is current assets minus inventory
Right? So that would
divided
be
by current liabilities.
2 to 1.
Yep.
2 to 1, right? Which of the following investment options would be least appropriate for an investor concerned about inflation?
Least appropriate would be the 20-year debenture.
Right on. Yeah, that's not gonna work. A 52-year-old investor living in California purchases 50,000 25-year treasury bonds with a 4.5% coupon. The California tax rate is 7, and the investor's marginal tax bracket is 24. The tax liability on a single year of interest is.
Isn't that half of the coupon? Like the semi or the full coupon or hold
Well,
on.
they're asking how much of this are we going to have to pay in taxes, right? So a lot of ways to go here. I think what I would have done is said, well, 4.5% means each of these bonds is paying me $45.
Yeah, that's what I was
I
about to
have
say.
50 of them. So
50.
I'm collecting 2,250 in interest. It's a treasury bond. The US Treasury can and will tax me on that. The state of California would like to, but can't.
So
So I'm going to times that by 24%. And I do indeed get one of those answers.
okay. So 50,000 25-year treasury bond with a 4.5 coupon. Um, is it 697?
I'm not sure how you got 697. I got $45 per bond times 50 bonds. I got 2,250. I'm receiving interest. And then I times that by what I owe the Treasury, which is 24%. I got 540. Remember, California, you don't have to pay the California tax,
Oh, mark me wrong on that though.
right? You don't pay the California tax because it's a Treasury bond. Treasury bonds are taxed at the federal level, but they're not taxed
Let's see.
at the state level. An investor might construct a bond ladder if they,
That's for when they're worried about interest rate risk, right?
yeah, exactly. Yeah. That's the most conservative bond strategy, right?
Mm-hmm.
Amy's father purchased a ABC 10 years ago, 40. Amy father's dies when it's 65 and gifts it to Amy in his will. If Amy sells the shares a year later when they're worth 70, her cost basis is.
65, right?
Yeah, there's a lot of dead people questions, right?
Yeah, what the heck?
A mutual fund identified as ABC tax-free muni bond fund must.
Um, if they're a tax-free municipal bond fund, I'm torn between like B and D.
Yeah, I'm with you. I'm with you.
I don't think it's A or C at all. But
Yeah.
I'm just like, if it's a bond
Well,
fund,
you're correct. You should definitely know it's not A because you should know that's 90%, not 80.
yeah. So then I don't think, I don't know. I'm kind of liking D, like the statement of additional on how the mutual fund,
Yeah.
but I also like B. I really like B. Let me just,
All right. I'm going for B. I'm not sure I'm right. I've never heard. I just told you that most of the time if we call a
yeah,
mutual fund by its
I'm
name,
gonna
we
go,
have to.
yeah, go B2 for me
Okay.
because I knew it was one of those, and now that I'm thinking
Yeah.
about it, I don't think that a bond fund needs the statement of
I'm with you. Jack has built a diversified portfolio for himself over the years, but less than 5% are foreign investments. Given Jack's desire to increase his international exposure, you would be least likely to recommend Jack purchase.
Well, you want him to purchase a euro dollar.
Would be least likely. So one of these things doesn't provide him an international exposure.
Is that the commercial paper?
Yeah, I think it's a terrible question. Sorry, Knopman. I think that's going to be the answer, but kind of a weird question. I'm not quite sure why they would ask this question this way. When a company's preferred dividends are subtracted from its net income and the result is divided by the common shares outstanding, the outcome is the company's.
I feel like that's the dividend payout ratio or the earnings per. I think it might be the earnings per share.
Well, when a company's preferred
Oh,
dividends, we got to pay the preferred stockholders. Now we have net income available to our common stockholders.
I think it's
So
dividend.
now it says we're going to take whatever this number is, and we're going to divide it by the number of shares outstanding.
Oh, the PE.
Yeah, there's nothing in here that tells me a price. So
All right, I'm gonna go dividend payout ratio.
yeah, the net income and the result divided by kind of a funky one. I I want to say that it's going to be earnings per share because we got net income, right? That's what the money that's available to our shareholders. And then we're dividing by the number of common stock. I'm going to say it's A because there's nothing in here about dividends except for the preferred, which we know we got to pay. Tough one. It's a tough one. I'm going with A. Broker dealer M is serving as a financial advisor to County P. May it serve as underwriter for the bonds of County P at this time?
Okay, he's serving as a financial. No, he can't, right?
That's right. MSRB says you can't do both.
Not.
The taxing power of an issuer of a limited tax bond is limited to a specified.
Okay, hold on. A taxing power of a limited tax bond. That's going to be the maximum rate.
Yeah, I'm with you. Two. So now we got to pick another one to go with two,
And
2 and 3, or 2 and 4.
tax source. I kind of like tax source.
I'm with you. I think that's the right answer, 2 and 3.
Okay.
While ABC is trading at 32.50, you buy a 35, call it 2.5. Subsequently, it's trading at 39.75, and you exercise your call. And determining the amount of profit, what cost basis per share should the client use?
Okay, so it's trading and they buy it at 35 to 37.50, right? It's the break
Oh,
even.
yeah. No, right on.
Okay.
Horace purchased 2,500 shares of MNO in March at 1850. In June, he gave half of his position away as a graduation gift to his niece Jill, while MNO was trading at 21.75. Jill sold these shares at 24.25 in November. For tax purposes, Jill sold these shares using a cost base of.
So it's the day. So the cost basis of someone that passes the day of the like the step of
So in June, he gave the position as a gift. So Horace, he gave it to Jill, his niece. So Horace wasn't dead at the time this happened.
no. So wouldn't that be the original
Yep, that's right on. The
basis
original cost
then?
base.
Because the only one that has the step up is the death,
Yeah,
right?
that's right. And both of those are testable, by the way. Both of those are testable. A corporation has 12 million net income after taxes and 5 million shares outstanding and 10 million shares of 6% of preferred stock. What is the corporation's earnings per share?
Okay, so 12,000 net income. What is the earnings per share? All right, I'll let you know in 5 seconds. Give me 1 second. Is it 2.4?
I'm taking 12 million
Hold on.
and I'm minusing 600,000. I
What
get
did I
11.4, right? So how did I get that? I took the 12 million net income
six
and
times
then I
5?
took 6% on the preferred. We got to pay our preferred stockholder, right? So
Divided
now we're paying them 600. So now I got 11.4.
by
I'm going to divide by the 5 million shares outstanding.
2.28.
Yeah, that's what I get. The city of Austin has just issued $1 million in GO bonds and already has outstanding 2 million. The city is located in a municipal county with 1.5 million in debt outstanding, most of which is ad valorem taxes. Austin makes up 70% of the county. What is the net direct debt per capita of Austin?
I'm not going to have questions like this on the exam.
Not at all. Not at all. What this is
This
getting
is
at
crazy
is
question.
coterminous when two or more taxing agencies share some of the same geographic boundaries. You will not see that. But what we would have done is assessed, divided the million, two, three, so 3 million divided by 10,000 population. Then we would have taken 70% of the 15 million and divided by 10,000. It would have given us one of these answers. Who
I'm going to
cares?
assign it to the gods.
I'm with you. I guess B and assign it to the universe. So remember, that's when we have no clue and we're just going to guess. We're going to guess B.
We're going to assign it to the gods.
An investor believes bond prices will fall. This investor should. I like this one.
If they believe that the bond prices will fall, then
So now you got to make a U-turn. That's right.
that means the bond prices will fall. So the interest rates are going up.
That's right. So you need something that would profit from interest rates going up, and it says sell.
So you would sell your.
Right? So you have two bullish strategies, bullish on interest rates going up. You could either buy yield-based calls
Uh-huh.
or you could sell.
Or you could buy yield-based calls.
Says sell. So we got to get on the opposite
You
side
could
there.
sell the yield-based puts.
Excellent.
That's what it is.
Your client, Barbara, has an investment objective of growth and aggressive income. Wow. That's going to be a difficult client. Her portfolio consists of blue chip stocks, high yield bonds, and treasury. Barbara has generally been unhappy with the performance of her portfolio, seeking your advice. You should tell her to.
Well, I mean, if she's not happy with her bonds, I'm going to tell her to increase her equity if she's aggressive.
Yeah, so your client Barbara has investment grade. Her portfolio consists of blue chips, high yield bonds, and treasuries. She's been unhappy with performance. Yeah, I'm kind of with you. I think it's a funky question, but
Like
if we're
increase
trying to get
her,
more performance, we're certainly not buying more treasuries. I'm with you.
well, I'm going to say eliminate her fixed income and buy more equity exposure.
Where increase her equity in all fixed income. Well, she's got the high yield bonds. I'm with you. I don't know. This will be a
Sell the
fun one.
high
This is,
yield. I mean, you're not going to buy more treasuries.
I'm with
Treasuries.
you. I think this is an interesting one. Let's see if we you got it right. I'm not quite sure about that one.
Oh, wait, go back. There was one other one that looked good. Sell the treasuries and buy more blue chip stocks, paying a steady. That could be the answer.
You want to do that one? I think they're both. I think that one's
Eliminating.
better.
Huh?
I think B is better. You want B?
Yeah, I think B sounds better because, like,
Yeah,
still increasing her equity exposure, but you're not
that's right.
eliminating everything.
Yeah, I think it's pretty aggressive to get rid of all the fixed income because that would give her her high yield bonds, which is the aggressive income component, right? So
Yeah.
Mr. Jones is long 100 shares of ABC at 51. He establishes a short straddle with a strike price of 50. The premium on the call is 3.25, and the premium on the put is 225. What is Mr. Jones' maximum gain on the position if the call option is exercised?
Okay. Long shares at 51. He said, start out striking. Premium on the call, so 3.25. 2.25. So it's 5.5.
Yeah, I'm with you. You're on the right track. Now you just gotta, got one more step to do.
5.5. And then subtract that by the 3.25. So 2.25.
No, I think you missed it. You're on the right track. So I don't know how you did it. I would have gone about it this way. I would have said, okay, I brought in a total of 5.5. That was where you were correct. And then I say, okay, but I bought the stock at 51. I had to deliver at 50, so I lost a point. So,
Oh,
so that's how I would have, there's a lot of ways to do it, but that's how I would have done
okay. Then mark me wrong, but I don't know.
it.
I think my brain's just fried,
Yeah,
honestly.
that's okay. We're towards the end. So you remember to give yourself permission on the real test to take a mental trip to Tahiti, just come back quickly or go to the restroom. A lot of balance sheet stuff on this thing. So net income of 100 million, shares outstanding 200 million, annual dividend 80 million, stock price is 18. The dividend yield is okay. So now we got to figure out what is the dividend. So the way we're going to do that, how would you figure out what that is per share?
This is a net income, annual dividend. Is it net income minus the annual divided by the shares outstanding?
I would have taken, well, we were being asked about the dividend yield, so we just have to deal with the dividends, right? So 80 million is the
Yeah.
dividend. And then I'm gonna
Uh-huh.
divide that,
By,
the 200 million shares that are outstanding.
okay. So I was between
And then I'm gonna get 40 cents now is what I get on the dividend,
80 million. Uh-huh.
right? I took the 80 million divided by the 200,000 shares because everybody gets a pro rata share of that.
Yep.
And I get 40 cents. Now I'm back in business. What it pays me, 40 cents
Mhm.
divided by what it costs me, $18 amp, I get 2.2%,
That's 2.2.
right? So the net income was just there to mess you up. Jane has invested 100,000 in non-qualified variable annuity. The assumed interest rate is 1.75. The contract is structured to annuitize in a year to be determined. During the accumulation period, Jane,
Um, I feel like it's the ordinary income. Must offset the earn.
it says she's invested, and it says during the accumulation period, she has annuitized.
Okay. And pay the appropriate income taxes. Is not required to pay taxes on the interest credited to the account. May offset the interest earned on her annuity. She offset during the accumulation period? Um, is not required to pay taxes on the interest credited to
Yeah,
her.
the money's going tax deferred till you annuitize, right?
Exactly.
A customer complaint has been resolved. A record of the complaint must be maintained by the broker dealer for
4 years.
right on. Which of the following best describes the purpose of an underwriting selling group?
The selling group.
Yeah, I would have done this by process of elimination.
Well, it's not the financial
That's
liability.
exactly right. So C is out.
Um, I don't know if it's providing due diligence. It could be, so I'm going to keep that there. Organize the road shows and provide documentary support to the syndicate. I don't think it's that one.
It's not.
So it's either A or B. Enhancing the marketability. I feel like A sounds really
Yeah,
nice.
funky way to say it, but they're just going to help sell the thing, which means it should be easier if we got more people selling.
Hmm.
An investor has a significant position in various money market instruments, comprising a substantial portion of his overall portfolio. Amongst the various risks that investors generally face, which of the following risks is most prominent in this investor's portfolio?
Okay, so he has a significant position in various money market. I mean, honestly, the interest rate risk.
Well, if it's short term, whatever interest rates are doing, that's what you're going to be doing. So if interest rates go up and you got commercial paper, bankers' acceptances, treasury bills, you're just going to reinvest at that higher rate.
Yeah. Or inflation. I don't think it's call risk.
Yeah, there are no calls in these things.
I also don't think it's credit risk.
Yeah, I think it's going to be inflationary risk. Tough question, but I kind of like it, right? Because you're sitting on cash or cash equivalents, which don't do well in an inflationary environment.
Yeah, it's inflation.
The XYZ high yield fund would be least likely to invest in the following bonds.
Whew. All righty. Well, if they're high yield, they're not going to do an A3.
That's right on. Good job.
A weird question.
Marcia has established a vertical spread using option contracts on ABC. Marcia will break even when the market price is ABC is.
I'm just trying to figure this out. She's
Yeah, I'm
established,
with you because they haven't told us whether it's a call spread
but
or
what
whether
do
it's
you
a
mean
put spread. So I'm with you. So we know that it has to be somewhere between the two. So we could toss out A
and C? It's
and
either,
B, right? So we got C or D
no, it's,
at the midway point of the two exercise prices. Well, I don't think that's true because remember, it would be whatever that net debit is above the lower strike. Yeah, I don't know. This is a tough one. I think by process of elimination, I'm going to go with uh, either C or D. Establish a vertical spread. So that means the strike surface using option contracts. Marshall will break even when the market price is. I don't. I like C intellectually, but it's not the midway. It would be whatever the net is above the lower. So now I'm just thinking of spreads above
above,
the lower. So if it's a call spread,
no, it's below the lower, right?
yeah, I think I think it's got to be in between. I like above the lower strike because that would take into account both a put spread, the break even somewhere above the lower strike, and a call spread, the break even somewhere above the lower strike. I'm going to go for D, but boy, that's a tough one. Do you want C or D? It's either C or D.
I'm gonna go D.
Yeah, that's be interesting. I'm pretty sure that's going to be correct because whether it's a put spread or a call spread, it'd be somewhere. Boy, that is a hell of a judgment question, Knopman.
That's a hard
Man,
question.
you guys are something else. Under the penny stock rules, what is required for an investor to be considered an established customer?
It's not, it's not signing the, it's not C or D.
Yeah, that's correct.
I think it's the open for 1 year.
Yeah, but not an IRA.
or not an IRA. Oh, trading at least three penny
Yeah,
stocks.
right. Is that
I
war
thought
funds?
they oh, you know what? 3 and 5 is the pattern day trader.
That's right. That's well, even first we got to get it all up there, right? Great job. I love how they say great job. Review all questions, review flag questions.
How many flags do we have?
I don't know. Let's see. So flag questions. Which of the fine, oh, submit all answers. We didn't do that. Submit exam. I guess the flag is so we can go back and talk ourselves out of the right answer. 78%, not bad. Not bad.
I'm kind of shocked.
Not bad. Let's see. And I didn't help you. In fact, I missed some. Now let's find the ones we missed. How do we do that? Back to the dashboard. Uh, come
Down.
performance. What do you think we do? Performance breakdown? Is that what you think we do?
I don't know.
Series 7 overall performance. Assessment and final exams. We did the benchmark. They'll let you retake it. That's kind of cool. But we don't want to retake it. We want to review it.
Click it.
So are we going to click it? I don't think we want to retake it. I want to go over the ones we missed.
I know. I don't know how we
So assessment, custom quizzes, flashcards,
exam and quiz history.
exam and quiz history. Oh, there we go. View summary. There we go. Answered correct. So we missed two on account opening and customer profile. Incorrect. So there's our incorrects. Debt securities concepts. Okay. I'm just wondering how we tell it to show us the ones we missed. So
Hit view PDF. Go up.
oh, there we go. Okay, we talked about that one. Which of the following best describes a bond equivalent yield? Okay, well, who cares? I mean, that was what we, well, Euro bonds. I think we talked about that one. Oh, I missed that one. I went for D and the answer was A. So you were right. It was diversification. I was thinking of it as a hedge. Age and birth, the signature of the muni principal representative is young. Now that's kind of interesting. They're saying there's a distinction between the MSRB. Must request a power of attorney. I don't know how we missed that. Did we not click that button? I think we said he needs trading authorization. Did I just hit the wrong button on that one?
Wait, can
I
you
think
zoom?
we said that. I think we said he needs trading authorization. This is question 12, right? We said he's going to have to give his wife trading authorization. Huh. Both A and B, we knew we missed that one. Yeah, we
Oh,
were right. It was
wow.
about qualified dividends. That varies depending on the type of stock you're buying. So we said 30, and I said I thought it was going to be 60, but who cares? I don't think you're going to see that. If you get a question on a qualified dividend, it's just going to be that it's taxed at a lower rate. Makeup of the communities.
The
Yeah, I got
dollar
that one
amount.
right. I thought
Yeah.
the dollar nomination was going to be the oddball. A 10% penalty. There we go. I think you said that. Did I say C? I think you said A, and I said C.
You said C, I said A.
Oh, okay. And was not correct. Okay. Must be stored as a digital file retained for 3 years. I must have hit the wrong button. We said that. We got that one right, I thought.
Wait, what? What's the answer? 6 years?
Remember, we said records that don't have a defined period would go into the 3-year bucket.
Yeah,
So
that's
I
wrong.
don't know why we missed that.
It says must be retained for 6 years.
For 6. Oh, my bad. Okay, well, that's on me. I had no idea there's such a rule that if it's not defined, it's 6. The spread, I don't even know how we're supposed to know this. Is December 30. It's not a debit spread because we sold the December. This is a debit spread. The March call with 4 months will have a higher premium than the December call. Well, I just don't think that's correct. Unless we're assuming that we bought the December and sold the March. Okay. I was thinking the following December. Now I'm sure they're going to tell us that's not correct because the option cycle is 369. Are we clear on this one? So what they're saying is that it was December, like it is this next month, and we sold this December, and then we bought the March. Okay, I think that's a grammar question that we missed on that one. Boom, boom, boom. The person must provide prior written notice. They receive written consent from their employer prior to opening. So I don't think they're a testable distinction, but the written notice amounts to consent because when your firm gets it, they either say yes or no. The minimum deficit was guaranteed. Yeah. I thought we might miss that one. It's because they were asking about the minimum, right? So you will fluctuate, but the minimum will never go below that. That's the floor. Plain vanilla transfer as let's see. The CMO structure that contains payoff in a defined sequence is known as plain vanilla. Okay, who cares? When I say who cares, I mean for test purposes. How do we make the investor approaches retirement? So it's not their entire life, it's the retirement
Oh,
age.
retirement.
Yeah, that's the target date.
Darn.
Um, yeah, I think this one we talked about. I think I was going to go for C just because I think that was the most common sense kind of one, right? Yeah, we talked about this one, right? The put is it's to zero, but here you only have protection on 100 shares of the 1,000, so that's why it's B.
Oh, okay.
Yeah, that was a tough one. But could decline based on the algorithm build. Yeah, who cares? 65 for where we talked about that one. Oh, you got it right and I got it wrong.
Oh,
Let's see. Sold it. Okay, you were right. My bad.
boom.
I had 14 out. I thought we bought this combination. We sold it. So
Boom. I
that's
kept
on
going.
me. That's
I,
on me because you said that and I made a T that showed the exact opposite. Oh, that's embarrassing.
okay.
Let's see. You said client margin account was credited. Yeah, we talked about that one. You got to net that, right? It's going to pay down your debit.
Yeah, I also just am not great in marketing.
Hmm.
That one
Oh,
was.
this is one I missed. I went for A. Oh, I got it right. You said expertise. And then I said I think it's A just because we shouldn't be doing the significant factor. So yeah, I thought that one was kind of funky.
That one was funky.
Yeah, we talked about this one. You're going to buy the puts because you remember if the dollar's going up, the euro's going down. I've never even heard of this, so who knows, right? I guess I never heard of such a thing as saying averaging the dollar. Uh, the three task questions are no, what makes it work, what's the end result, and it doesn't guarantee a profit.
It doesn't guarantee a profit.
I said, yeah, I thought this would be higher levels of political risk, just being the ugly American that I am that, says all these other countries, man,
I don't think that's going to be on the test though.
Oh,
Like,
absolutely not. The part that we both got was the currency risk.
okay.
Let's see, affect any trades during the term of the tender. Well, I think we did that one. I'm not sure why we missed that one. I think I must have hit the wrong button.
No, I meant to put the wrong answer. I didn't know that one. I don't think.
Oh, okay. Because I thought you got this right. You said secondary, secondary, secondary. And I thought you told me that you were going with D because A, B, and C were secondary transactions.
Yeah,
I
that
thought,
is the
you
right
know,
answer was the secondary.
purchase. Oh, because you can convert, that would be increasing your ownership.
Yep.
Let's see. And this is making purchase non-preferred stock. Okay, yeah, boy, that's a tough one in terms of reading non-convertible, a short sale in the common stock. And yeah, tough one.
They're not lying.
Cash dividends and interest payments increase the debit balance. And no, remember the interest charges and purchases. You have me mark you wrong on that one But remember, you're borrowing from the firm, so the interest charges hit the account. If you use your SMA, that's money we're lending you. Boom, 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 boom. How do we miss that one? I think
Oh,
you got that one right.
no,
That's on me again. I'm the one who missed that one, I think. And
no, you
interest
got that
income
one
is
right.
taxed at the federal level only. That was correct. That's exactly what I did. Huh. I'm
No,
not.
you got it. No, you got it right. I got that one wrong.
Oh, okay. I was going to say, I thought I could do that, dividend payout ratios.
Yeah, it's earning per share.
Yeah, we talked about that one. There were
Mhm.
some tough balance sheet ones on this one. That was a nice roll. Look at this. Boy, you went on a nice roll all the way to the end. That's the way to finish strong, my friend.
Wow.
That's pretty damn good. I just want to thank our friends at Knopman and thank you for once again giving test takers a free ride. If you'd like to purchase Knopman content, the discount code is Guru10 if you choose to do so. Remember, inch by inch, your Series 7's a cinch. Yard by yard, your Series 7 is hard.